In today's show, this Bitcoin long-term hodler metric is nearing the Bitcoin price bottom zone. That's right, it's signaling that a market bottom could be close. Also breaking news just in, Singapore's largest bank to offer Bitcoin to 100,000 more clients to meet increased demand, as well as Russia approving the use of Bitcoin and crypto for cross-border payments. Also check this out, Bitcoin went from $43,000 to $19,000 in the last 6 months. That means 77.7% of all the Bitcoin did not even move. Where my diamond hands at, and as Plan B shares here, all assets go down when interest rates rise as fast as in 2022, stocks, bonds, real estate, gold, and even Bitcoin, but the decline will not last forever and probably reverses suddenly. What do you think the trigger for the next pump will be? And quoting Max Kaiser, the total addressable market for Bitcoin would be $400 trillion. That's the total sum of the global financialized world. Bitcoin will eat that, essentially, so we're going to see a lot higher prices, $1 to $2 million per BTC. Also in today's show, XRP price breaks out a range with now a 50% rally in the past week. We'll be discussing why. And did you know that Ripple will spend over $100 million defending itself against the SEC in their XRP lawsuit? Crazy, right? Also in today's show, banking giant with nearly $450 billion in assets under management launches their crypto venture capital arm. According to a new company press release, Nomura Holdings, which has nearly $450 billion in assets under management, announced that Laser Digital will serve as its new crypto business. Also in today's show, Bitcoiners looking for moon or doom should do one thing until 2023, says crypto analyst Mikhail Van de Poppe. Quoting him here, people are literally waiting for, so now, Bitcoin, moon, or doom? We simply can't tell so fast after such an event. It requires some time. Markets are pricing in the worst, but all I say is that now until 2023 is the period to accumulate. Also in today's show, MicroStrategy's Michael Saylor thinks Bitcoin can reach $500,000 in the next decade if it matches the market cap of gold. Quoting him here from a recent interview, the next logical step for Bitcoin is to replace gold as a non-sovereign store value asset. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Guess what? We just reached 53,000 subs here on the YouTube channel, so I just want to say I greatly appreciate your continued support. If you're not already subscribed to the channel, you know what to do. Hit that bell icon, turn on all notifications. Will Smith that like button and drop a comment right down below, as it helps out tremendously with the YouTube algorithm. And today's episode is brought to you by iTrust.Capital, the #1 crypto IRA platform in the world. Do you know you can buy, sell, and trade 25 plus cryptos as well as precious metals, gold, and silver tax-free with a crypto IRA? That's right, there are no monthly fees, only 1% transaction fees. There's institutional grade storage, and you can get started today opening up your account with only $1,000. And for signing up today and making your deposit, you're going to receive a $100 reward in Bitcoin for funding your account. Also like to point out that staking is now available in iTrust, so you can now earn staking rewards with Polkadot tax-free with your crypto IRA. So go ahead and get started today, and let's get this crypto tax-free. All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV, and this is podcast episode number 1054 of the Crypto News Alerts pod. Now, a Bitcoin on-chain indicator, which tracks the amount of coin supply held by long-term hodlers in losses, is signaling that a market bottom could be close. That's right, as of September 22nd, approximately 30% of Bitcoin's long-term hodlers were facing losses due to Bitcoin's decline from the $69,000 all-time high in November 2021 to around the $19,000 mark now. That is about 3 to 5% below the level that previously coincided with Bitcoin's market bottoms. For instance, in March 2020, Bitcoin price declined from $4,000 amid the COVID-led market crash, which happened when the amount of Bitcoin supply held by long-term hodlers in loss climbed towards 35%, as shown right here in this chart. And similarly, Bitcoin's December 2018 bottom of around 3,200 concurred alongside the long-term hodler loss metric, rising above 32%. And in both cases, Bitcoin followed up by entering a long bullish cycle. Hence, the number of long-term hodlers in loss during a typical bear market tends to peak in the 30 to 40% range. In other words, Bitcoin's price still has room to drop, likely into the $10,000 to $14,000 range for long-term hodlers in loss to reach the historic bottom zone. Now, coupled with the long-term hodler supply metric, which tracks the Bitcoin supply held by long-term hodlers, it appears that these investors accumulate and hold during market downturns and distribute during Bitcoin price uptrends, as illustrated here in this chart. chart. Therefore, the next Bitcoin bull market may begin when the total supply held by long-term hodlers begins to decline. And as you can see right now, they're at highs. Now, meanwhile, the number of accumulation addresses has been increasing consistently during the current bear market. Data shows the metric tracks addresses that have at least 2 incoming non-dust transfers and that have never spent funds. And interestingly, this is different than the previous bear market cycles that saw the number of accumulation addresses drop or remain flat, as shown here in this chart, suggesting that hodlers are unfazed by the current price levels. Where my long-term Bitcoin hodlers at, diamond hands, make some noise. And in addition, the number of addresses with a non-zero balance stands around 42.7 million versus 39.6 million at the beginning of this year, showing consistent user growth in a bear market. So Bitcoin is nevertheless struggling to reclaim that critical $20,000 support in a higher interest rate environment. Its correlation with U.S. equities also hints at more downside this year in 2022. From a technical perspective, Bitcoin can drop further towards the $14,000 level this year if its cup and handle breakdown pans out as shown here in this chart. Such a move would push the aforementioned long-term hodlers and loss metric towards the 32 to 35% capitulation region, which could ultimately coincide with the bottom in the current bear market. So there you have it. Where do you feel the bottom will likely be for this cycle? Do you think we can drop all the way down to $14,000 as this chart suggests? Let me know in the comments right down below. Now for some breaking news, Singapore's largest bank to offer Bitcoin to 100,000 more clients to meet increased demand, as well as Russia approves the use of Bitcoin and crypto for cross-border payments. Let's freaking go. That's right, the deputy finance minister said the policy describes how to acquire crypto, what can be done with it, and how to use it in cross-border settlements. Quoting him here, now that people are opening crypto wallets outside of the Russia Federation, it is necessary to do this in Russia with entities supervised by the central bank, which are required to comply with the anti-money laundering and know your customer requirements. Now check this out. Bitcoin went from $43,000 to $19,000 in the last 6 months. That means 77.7% of all the Bitcoin did not even move. Diamond hands, where you at? And quoting Plan B, all assets go down when interest rates rise as fast as in 2022. Stocks, bonds, real estate, gold, and even Bitcoin. But the decline will not last forever and probably reverses suddenly. What do you think the trigger for the next pump will be? And he also shares here, central banks will resume soon. More currency, more reserves, more repos, more IOU. And quoting Max Kaiser, the total addressable market for Bitcoin would be $400 trillion. That's the total sum of the global financialized world. Bitcoin will eat that essentially. So we're going to see a lot higher prices, $1 to $2 million per BTC. Let's freaking go. And before I break down next story of the day, XRP price breaks out of range, rallying about 50% in the past week. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin down about 2% for the day, trading at around 18,900 at the time of this recording. We have Ether down 1%, trading just under $1,300, while Solana, Polkadot, and Avalanche are all correcting, while Binance Coin and XRP are breaking out and in the green. And speaking of XRP, let's break it down. So why is XRP showing a gain of almost 50% just in the past week? Well, according to defense lawyer James Fillon, on September 18th, Ripple Labs filed a motion for summary judgment, a legal process that involves the court making a final decision based on the provided facts rather than ordering a trial, and a decision on whether XRP is a security is expected by mid-December. Quoting him here, the SEC versus Ripple, XRP, the parties have filed a request that any motions by third parties to seal portions of the party's summary judgment filings be filed subject to the court's September 12, 2022 order. Specifically, this means that any motions to seal by third parties would be due by December 9th, 2022, and any oppositions to those motions would be due by December 22nd, 2022. So excitement over the news could be improving investor sentiment about the longer-term prospect for XRP. How many of you are currently bullish on XRP? Let me know in the comments below. And from the perspective of technical analysis, the XRP price is looking to secure a second daily close above a long-term descending trendline resistance, and trading volumes and open interest on futures contracts have risen sharply over the past 24 hours. Quoting crypto analyst Marcel Peckman, XRP's open interest is now at $575 million, up from $310 million just a week ago. So traders who are not yet positioned might consider waiting to see if the 200-day moving average at 49 cents is flipped to support over the next few daily closes, and typically intraday and swing traders take profit at longer-term resistance levels, and they also anticipate price rejections and lower support retests after an asset manages a breakout from a period of long consolidation, price bottom, or a market structure altering move. And crypto analytics data provider, the Kingfisher, drove a similar point by suggesting that buyers would likely have an opportunity to long XRP lower. Quoting him here, "You'll likely have an opportunity to long XRP lower if that's what you're looking for. Don't FOMO, long the long liquidations." So there you have it. And did you know that Ripple will spend over $100 million defending itself against the SEC in this XRP lawsuit, says their CEO, Brad Garlinghouse. Quoting him here, "This is a federal government agency that works for us. As part of the government, we should feel outraged, like the idea that now everything under Gary Gensler's view is a security is crazy talk. I do think that the SEC has gone cuckoo for Cocoa Puffs, and I do think in some positive ways it's catalyzing all of us to write to our legislatures and donate to the people we want to get elected. And I think maybe the pendulum may swing a little bit to a smackdown to the SEC." So there you have it. And before I break down next story of the day, banking giant worth nearly $450 billion in assets under management launches its own crypto venture, Capital Arm. But first, let's take a quick look at the overall crypto market cap, sitting at $928 billion with $77 billion in volume in the past 24 hours. The current Bitcoin dominance back on the decline at 39%, with the Ether dominance at 17.2%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Kronos leading the pack at 13.5%, trading just above 12 cents, followed by XRP up another 11% for the day, trading just above 49 cents, followed by Binary up 8.7%, trading at $161. And checking out the top 100 cryptocurrency gainers for the past week, you can see a mixture between green and red. We have XRP up 49% for the past week, Chili's up 31.8%, and Algorand up 25%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we're currently rated at 20 in extreme fear. Yesterday at 22, last week at 20, and last month at 25 in extreme fear. But all right, now let's break down our next story of the day. A Japanese banking giant is venturing into the world of digital assets by launching its very own crypto-focused venture, Capitalist Arm. That's right, according to a recent company press release, Nomura Holdings, which has nearly $450 billion in assets under management, today announced that Laser Digital will serve as its new crypto business. Now, Nomura Holdings says the first product to launch will be Laser Venture Capital, which will invest in blockchain firms with a focus on decentralized finance, centralized finance, and Web3 technologies. Now, Laser Digital, which has been incorporated in Switzerland, also plans to offer secondary trading servers as well as investment products, according to the press release. Quoting their CEO, "Staying at the forefront of digital innovation is a key priority for Nomura. This is why, alongside our efforts to diversify our business, we announced earlier this year that Nomura would be setting up a new subsidiary focused on digital assets." That's right, back in May, Andreessen Horowitz, another venture capital firm, launched a $4.5 billion digital asset fund as the crypto market slid into a winter. Now, Andreessen Horowitz, which has over $28 billion in assets under management, said it launched the fund because the world is entering into the golden age of Web3 development. Quoting them here, "We believe blockchains will power the next major computing cycle, which we call crypto or Web3. We think we're now entering the golden era of Web 3.0. Programmable blockchains are sufficiently advanced, and a diverse range of apps have reached tens of millions of users." And about a week before that, Andreessen Horowitz launched a metaverse-focused crypto fund, saying that video games have evolved over the last decade into social media-like networks that utilize digital assets. So there you have it. As you can see, mass adoption coming to a crypto theater near you. And before I break down next story of the day, Bitcoiners looking for a moon or doom should do one thing until 2023, and that's accumulate, says crypto analyst Mikhail Van de Poppe, as well as Michael Saylor thinks Bitcoin can reach $500,000 per coin in the next decade if it matches the market cap of gold. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,300 plus videos right here on my YouTube channel. If you're not already subscribed, you know what to do. Hit that bell icon, turn on all notifications, Will Smith that like button, and drop a comment right down below. And of course, you can follow me on all the major podcasting platforms, from Spotify, home of the Joe Rogan Experience, to Apple's iTunes and Google Play, and all across crypto Twitter, Facebook, Telegram, and TikTok. So wherever you're at, be sure to plug in in and follow me there. But all right, now let's break down our next story of the day. A widely followed analyst is recommending one method for Bitcoin traders to buy their ticket to the moon. Crypto trader Mikhail Pop tells his 627,000 Twitter followers to accumulate Bitcoin until next year. Quoting him here, people are literally waiting for, so now Bitcoin, moon, or doom. We simply can't tell so fast after such an event. It requires some time. Markets are pricing in the worst, but all I say is that now until 2023 is the period to accumulate. And he also recently tweeted, Bitcoin literally has been making a fake out at the FOMC event. I am not sure whether we are already seeing the trend. Probably direction will come today/tomorrow. For now, Bitcoin needs to reclaim the $19,000 mark in order to have any bullishness. And the trader expresses he'd rather go long on Bitcoin and the general crypto markets here versus waiting for a potential lower drop. Quoting him here, I'd still preferably want to be long on the markets of crypto here rather than waiting for $12,000 to $14,000. And in light of yesterday's 75 basis point interest rate hike, Pop says the crypto markets are reacting favorably for crypto, especially the US dollar currency index. Quoting him here, very good reaction on the markets. DXY tumbling down, yields tumbling down a bit, indices up, Bitcoin up. Now the DXY is a relative measure of the US dollar's strength, and a weaker DXY is generally better for crypto assets. But looking at his DXY chart, Pop sees bearish divergences everywhere. Quoting him again here, bearish divergences everywhere on the chart for DXY. But all right, now let's break down our final story of the day. Michael Saylor's $500,000 Bitcoin price prediction. Over the years, the 57-year-old entrepreneur has presented himself as an outspoken supporter of the leading crypto, while his company is the largest Bitcoin corporate holder. In fact, they were the first corporate holder to put Bitcoin on their balance sheet, and they recently announced they now hold 130,000 BTC. Now, the pro-Bitcoin American business executive seems unfazed by the ongoing crypto winter. Despite the market's collapse this year, he believes Bitcoin will reach its all-time high of $69,000 in the following 4 years. Now, obviously, if you do the math, he is being conservative. During his latest interview, he went further, forecasting that Bitcoin could trade at $500,000 per coin in the next decade should it match the market cap of gold. Quoting him here, the next logical step for Bitcoin is to replace gold as a non-sovereign store value asset. I feel it's inevitable. It's only a matter of time. And despite the significant current price difference between the two assets' market cap, gold is around $11 trillion, while Bitcoin is approximately only $365 billion. Saylor has often given his preference to the cryptocurrency, and last year he outlined Bitcoin's merits and claimed it is 50 times better than the precious metal. Agreed. And this summer, he doubled down on his stance, saying the asset is obviously better than gold and everything that gold wants to be. Instead of going to zero, as some might predict given its recent price decline, Saylor envisioned it'll shoot up to $1 million in the years to come. Send it. And a few days ago, the company interacted with Bitcoin once again, spending $6 million more to purchase 301 coins at an average price of $19,851 per BTC. Thus, the NASDAQ-listed firm's crypto holdings surged to a whopping 130,000 BTC. However, due to the market's crash, MicroStrategy currently sits on a significant unrealized loss on its investment, and over the years it has spent around $4 billion to accumulate its stash. Well, this amount is now worth approximately $2.5 billion, but do keep in mind you don't lose what you don't sell, as one Bitcoin is still equivalent to one Bitcoin, so 130,000 Bitcoin is still equivalent to 130,000 Bitcoin. Now, the shares of the company have also been on a downtrend in the past several months. Last November, when the crypto market was at its peak and Bitcoin was trading at almost $70,000, MicroStrategy stocks were worth over $800, while they are now hovering at around $200, which is a 75% decline. So there you have it. What are your thoughts surrounding Michael Saylor's bullish price prediction for the King crypto, reaching $500,000 per coin or even potentially $1 million per coin over the next decade? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode. Pezza wrote, I am super excited to be a part of the Bitcoin era. The current price doesn't bother me because I'm a believer in freedom and the human race. We got this, fam. Much love and respect. And he adds here, Bitcoin is going to have a Shawshank redemption period. It's going to crawl through a river of fiat, banker, Wall Street inflation, and FUD. It's going to come out the other side and things are going to be great. All we have to do is hollow our noses and be patient, calm, and free. Preach. Our next featured comment comes from Nate. Jamie Demon, you are funny, JV. Will Smith, that like button. And loving how despite all the ongoing FUD and macro concerns, companies, countries, central banks, and others just keep moving into the space, expanding its functionality and providing even greater access to institutional investors around the world brings a degree of increasing inevitability, I'd say, Go Bitcoin. Let's freaking go. And our third and final featured comment comes from Wayne. People like Jamie Dimon need to be arrested and charged with fraud and conspiracy to commit fraud. They know fiat is fake, but they keep pumping it. Anyway, facts. And to be featured on tomorrow's episode, drop a comment below. If you're not already subscribed to the channel, you know what to do. Turn on all notifications by hitting that bell. Will Smith, that like button, and drop a comment below. And I look forward to seeing you on tomorrow's episode. Peace.